Hey everyone, welcome back to Corporate Decoder. On this episode, we're going to take a deep dive into Enterprise Products Partners LP, their latest quarterly report, and see if this energy giant is really delivering on its promises or if it's just talk and no walk. Alright, so what we have here is something called a Form 8K. This is basically like a headline announcement for public companies, anything really big and important that happens between their regular quarterly reports gets filed here. Today's filing is dated July 28, 2025, which tells us the company is reporting on events that just happened or are happening right around this very moment. We're looking at Enterprise Products Partners LP, an energy company that's a big player in moving and processing natural gas and other oil products. Its stock ticker is EPD and it trades on the New York Stock Exchange. The main thing they're reporting on today relates to their financial and operating results for the 3 months that ended on June 30, 2025. This is essentially their second quarter earnings report. This item tells us exactly that they've issued a press release announcing their financial and operating results for the second quarter of 2025. The filing also includes an exhibit, which is the actual earnings press release. This is where we'll find the juicy details about how they're performing. Now let's rewind a bit to understand what this means for the company and its investors. Enterprise Products Partners is a master limited partnership, often called an MLP. They own and operate a vast network of pipelines, storage facilities, and processing plants. This kind of business is usually pretty stable because energy transportation is a fundamental need. Looking at the signatories, we see R. Daniel Boss, Executive Vice President and Chief Financial Officer of the General Partner, signing off. This is standard procedure for these filings, so we know the report is officially sanctioned by the company's top finance folks. When it comes to earnings reports like this, the real stars are the numbers that show how much money the company made and how much it cost to make that money. So what did Enterprise Products Partners deliver in the second quarter of 2025? Let's break down some of the key takeaways directly from their earnings announcement. While the exact numbers aren't fully detailed in this 8K filing, the accompanying press release would typically provide a breakdown of their total revenues. This is the top line number showing all the money the company brought in from its operations. Then we'd look at operating income. This tells us how much money is left after you subtract the direct costs of running the business, like the power needed for those pipelines and the salaries of the people who keep them running. If this number is growing, it's a very good sign that the core business is healthy. Finally, we get to net income, which is the ultimate bottom line. This is what's left after all expenses, including interest and taxes, are paid. It's the number investors often focus on most because it represents the profit the company actually keeps. We need to remember that for a company involved in moving commodities like natural gas and oil, their revenue can fluctuate based on the prices of those commodities. For example, if oil prices are high, they might make more money even if they transport the same amount of oil. But if prices are low, their revenue could dip even with strong volumes. This is a key factor in understanding their performance. The way they've structured this filing is pretty standard. An 8K is meant to be a quick update. The real meat will be in that press release they've referenced. Now let's think about what this means in a broader sense. For Enterprise Products Partners, what matters is consistent growth and profitability. They need to keep those pipelines full and their facilities running efficiently. If their earnings are up quarter over quarter and year over year, that suggests they're managing their assets well and have strong demand for their services. Also important is how much debt they have and how they're managing it. Energy infrastructure is expensive to build and maintain, so these companies often carry significant debt. A company that can grow its earnings while managing or reducing its debt burden is typically in a strong financial position. We also want to see how they're reinvesting in the business. Are they upgrading their pipelines, building new ones, or expanding their storage capacity? These investments are crucial for future growth and for staying competitive in the energy sector. From what we can see in this filing, the focus is on announcing their second quarter results. The 8K itself doesn't contain the detailed financial tables, but it points us to the exact document that does, which is the earnings press release. It's like the filing is the cover of a book and the press release is the first chapter with all the important details. Let's consider the external context. Enterprise Products Partners operates in a very competitive market. There are other large pipeline companies, and the energy sector itself can be quite volatile due to global events and regulations. Their ability to maintain or increase market share and profitability is key. If their second quarter showed strong earnings growth and healthy cash flow, it would indicate a company that's navigating the current energy landscape effectively. But if their numbers were weak or showed a decline, it might signal challenges related to lower energy prices, decreased demand, or increased competition. Looking at the operations, they are involved in the midstream sector of the energy industry. This means they are the crucial link between oil and gas producers and the refiners or end users. They don't drill for oil or gas, they just move it and process it, which generally offers more stable revenues compared to exploration and production companies. Now, for my take on enterprise products partners, based on what this filing represents, this report is essentially a signal flare saying, hey, look at our latest numbers. It's the official announcement of earnings, and the real story is in the details of that October 28, 2025 press release, which we don't have live access to in this specific document, but we know it exists and contains the critical data. We've seen companies in this sector benefit from increased energy demand, but also face headwinds from fluctuating commodity prices and increasing regulatory scrutiny. If enterprise products partners posted solid earnings and positive outlook indicators in their actual press release, it would suggest they are a resilient company that can manage the inherent volatility of the energy market. Their extensive infrastructure network is a significant moat, a barrier that makes it hard for competitors to challenge them. However, we always need to be cautious. A strong earnings report doesn't always mean smooth sailing ahead. We need to dig into the details of their debt levels, their capital expenditures, and any potential risks mentioned in their full financial statements. For example, if they mentioned significant delays in a major pipeline project or a substantial increase in operating costs, that would be a red flag. The crucial thing to remember is that financial reports like this are a snapshot. For enterprise products partners, the ongoing trend of their financial performance over multiple quarters and years is what truly reveals their strength and strategic direction. We are looking for consistent revenue growth, efficient cost management, and a healthy balance sheet to indicate a well-run company. Alright, that's our decoder for this Enterprise Products Partners LP filing. If you found this breakdown helpful, remember to hit that like button and subscribe for more deep dives into the world of corporate finance. We also have a fantastic Discord community where we discuss these filings and much more, all linked in the description below. So join the conversation there too. What are your thoughts on Enterprise Products Partners and its recent performance? Let us know in the comments below, and we'll see you in the next video.